Today is May 13th, 2016, and this is ADM Investor Services Weekly Market Wrap-Up. Our guests this morning are Steve Freed, ADM Vice President of Grain Research, and Alan Bush, the Senior Financial Economist at ADMIS. Remember, the opinions expressed here are solely the opinions of our guests and should not be construed as the opinions of ADM Investor Services or Archer Daniels Midland Company. Steve, let's talk weather. What is the latest on the El Nino switch to La Nina and a potential impact on the U.S. summer weather?
The latest maps came out and they're suggesting that we're moving from El Nino to La Nina faster than what people had thought. So it just raises first the question of how does that affect U.S. summer weather? And it goes back to a few good weather meteorologists that think that we'll be warmer and drier this summer than we were last year.
The soybean market has rallied $2 recently. Are U.S. farmers considering switching some corn acres to soybeans?
I think so. I mean, right now we're hearing like in the Dakotas, Michigan, Indiana, and Ohio in the south, we could see as much as 2 million acres switched from corn to soybeans, partly because of the rally, and also in Indiana and Ohio, we only have 30% of the corn planted, and it's wet there. It's supposed to rain for another week, and that might force the farmers there to switch to soybeans.
The USDA reported higher U.S. grain exports this week for soybeans, corn, and wheat. Do you see this as a trend, and how will this impact the price outlook?
I think that behind the numbers, there's a lot of commercials that feel that the soybean exports will actually be bigger than what the USDA said because of the unprecedented flooding in Argentina switching demand to the United States. The corn and wheat export numbers are probably maxed out given some of the competition around the world, especially on the wheat side. But again, we kind of have to watch some of the global economic news. We have to kind of watch some of the other crop productions like in Europe and the former Soviet Union this summer. Right now, the big story is the USDA is probably too low in soybean exports.
What do you think farmers and end users should be doing in respect to risk management right now?
I think that the main thing is that, first of all, farmers sold a lot of beans early before this rally. And there really isn't anything for them to come in and replace that with. They should probably just start increasing cash sales for 16 and 17 crops to average up. But for the corn, they haven't sold as much. And so if they want to sell some cash on a rally, they need to definitely replace that with calls in case the summer weather is less than ideal.
One more grain question. Are the rally in the dollar and lower Chinese commodity prices affecting grain prices?
I think they definitely are, because when we saw the beans first rally, things like silver and things like that all rallied with it. And it kind of was in concert with this huge rally in steel and iron ore prices in China, which the Chinese thought was speculative buying. So now they've cracked down on that. And so these markets might be overvalued with speculative longs. Some people look at the overall spec position in commitments to traders very high. And so if we continue to see weakness in China, it could affect our stock market, it could affect energy markets, and it could affect some of the commodity markets like soybeans and silver.
So Alan, staying with China, most analysts believe China's economy will slow, with some predicting a hard landing. Why do you believe China's economy is turning the corner?
Well, probably one of the best indicators of an economy is bank lending. And bank loans in China in the first part of the year were at a record pace, although they did back off a bit in last month's numbers. So with bank lending as strong as it is, it implies that companies in China are demanding money, borrowing money to grow their business. So this is a leading indicator, and to me it suggests that China is turning the corner, and I would not be as negative at all as many analysts are on the Chinese economy. The economy there is rebounding, and it will do better this year. In fact, I think much better than almost every other analyst believes.
Recently, several Federal Reserve officials talked about the possibility of hiking the Fed funds rate at the June meeting. How can the Fed tighten in light of the recent weaker than expected GDP and non-farm payrolls reports?
Well, the short answer is they can't. Recent economic numbers have not been that good. What this really is a dollar support package. It's a dollar support initiative. In fact, there have been 6 Fed officials in the last week and a half, all of which are talking up the possibility of a rate increase. 4 of them talking about a rate increase in June, others saying higher rates later. So this is really just an attempt to support the dollar, which had fallen to 16-month lows. Once the meeting rolls around, June 15th, I think there will be much less talk from Fed officials about raising the rates. But for right now, it's having its desired effect to support the dollar, and I think that is its only intention, is to support the dollar from these recent lows.
Alan, let's talk gold. Demand for gold surged 21% in the first quarter of 2016, and the price of gold is up over 20% year to date. In light of gold having its best gains in almost 3 decades, what is the price outlook for gold futures now?
Well, first of all, we did see some new highs early this month, but as Steve mentioned, with the dollar getting a bit stronger, that has been a negative on some commodities, including the precious metals, gold and silver. But we do feel that once the dollar stabilizes, that the fundamentals in respect of supply and demand fundamentals for gold will come back into force. Don't forget that we have peaked in production in the gold market last year, and that gold production is likely to fall over the next 5 or 6 years. So I would not be surprised. In fact, I am predicting new highs for the move in gold within the next couple of months, and I would not be surprised to see a move approaching 1,400 in the gold futures.
Steve, you had mentioned that some analysts, would like to sell the commodity markets right now. So I guess that brings me to our final question: what's hot and what's not?
Well, I think if you poll people, the first thing, the markets will probably be volatile. As Alan says, there's a lot of difference of opinions, and that adds to volatility, but it also gives a good trading atmosphere for the marketplace. But right now it looks like the dollar is hot and bonds are hot, and that most commodities, if we do have too many spec longs in them, are not. So there are some people that want to sell soybeans that, contrary to what Alan says, they want to sell gold. They may even want to sell sugar because they've impeached the president in Brazil, and that was the main reason why sugar went up to some of these higher levels. So we've got a little short period here in which could see some profit taking in most of the commodity markets.
Remember, the thoughts and opinions heard today are solely the opinions of our guests and should not be construed as the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or would like to open an account or find an affiliated ADMIS broker in your area, please visit www.admis.com.